first time market correction, welcome to the right place because I'm crying as well. Hey all, Choiboy here. Welcome to another video. We got the first Sharesies portfolio update for 2022. Hope you all had a happy new year and enjoyed your breaks. Back to reality now, back to work, back to school, back to wherever. But nonetheless, we got a roller coaster ride happening in the stock market, but not only stock market, but the crypto market as well. And I'll be sharing my thoughts on what I think about the whole situation with the markets. Now, before we get into it, just a disclaimer, I'm not a financial advisor. Please take everything I say with a grain of salt because I'm an amateur just like you guys. Please do your own research before you buy or sell anything I talk about in this video. Without further more to do, let's get straight into it. It's $16,287 portfolio value. Quite of a dip. It's around 12% for me, so yeah, let's look at the return. It's negative $4,385. Okay, so it was around negative 2,200 or something like that last time, so we got a unrealized gain or loss of negative $12,000. So that grew a lot. I guess it might not be as bad as some people who are buying and holding stocks that grew so much in the past year. They would have seen bigger dips, where mine was already at the bottom and it just dipped a bit more because of the market. Now, there were not any specific news for each of the companies and why it dipped, and I'll talk about it. I'll talk about why the market dips regardless of no bad news from single companies or whatnot. So, you know, all these kind of things won't change until I sell a bit more, but nonetheless, that's the return, negative 4,000. Simple return is 16% in the negative, and yeah. Apparently I put 27k into my current companies, mostly because I lost a lot of money in Blackberry. Nothing new to you guys, so let's get straight on to the company. So as I mentioned, there hasn't been any negative news about specific companies here. It's just that they have been following the market trend. Now, what I mean by market trend is when the market in general, the stock market or the crypto market, is going in an upwards trend, we call that a bull trend, everything goes up. Regardless of if it's a good company or not, it has a tendency to go up with the market. On the other hand, we have something on the downtrend, which we call a bear market. Now, in a bear market, everything goes down. Like mostly everything goes down regardless of how good they're doing. Unless investors see some kind of good value in a specific company for some reason in the coming 1 or 2 years, there will be no companies that will be getting out of that bear market. Now, this market cycle is quite normal. It's just that most of us wouldn't have experienced a full cycle because the last cycle, the last crash happened in 2008. Now, that was the housing bubble, the US housing bubble. We say the market tends to cycle every 8 to 12 years. Now, we've been more than 14 years since the last crash in 2008. So people are now thinking, oh crap, we have passed 14 years since the last crash, and the March 2020 wasn't a crash. It was just a flash drop and it just recovered even higher. Okay, once the market crashes properly, it takes years to recover. Years. Like look at the S&P 500 between 2000 and 2008. We had the dot-com bubble in 2000 and it dropped a lot. It stayed and it recovered for 8 years just to reach the same high back in 2008 and it dropped again. That's normally what I would expect from a crash. It's not easy to recover from. Sure, we do live in a different world now. Just internet all over the place. I don't know how the future recoveries will look like, but just looking at history, it was never an easy task to recover from a stock market crash. So are we going towards that? I'm not sure. We are in the correction phase at the moment because it hasn't gone to like 30% dips, right? So if we look at this article here from Fortune, we call a pullback when it's 5 to 10%. That's something like, you know, it dipped a bit, nothing much. People like just look at it, okay, just as usual, nothing much happening there. So 5 to 10% dips are called pullbacks. Corrections are when it's 10 to 20%. Now, we are currently in the correction phase. It's normally okay, but it's normally the phase where most people are thinking, what should I do with my money? So that's the correction phase, and the crashes are 20% or more, but most of the historic crashes were around 30 to 50% crashes, especially the really bad ones like the Great Depression and whatnot. So these are the kind of 3 different types of dips, I guess, and we're in the middle. So it's in a very awkward phase. Like, we don't know what to do with our money at this point. People don't know if they should sell. People don't know if they should just buy the dip more or just wait a bit more to crash more. You know, this is what we call timing the market, and that's what most people shouldn't be doing, but we just do it. So just keep that in mind. We're in an awkward phase. It's hard for everyone. It's not easy to predict what it's going to do in the next couple of months to years. You just got to play along with it. You can either sell everything, or you can dollar cost average it, or you can buy the dip. Whatever makes you feel comfortable. But of course, with good research basis, you need to research and you need to know what to expect and do some risk management and go from there. So that's my tip on these. But without further more to do, let's go into the first one. Blackberry. It's gone down back to the $7 range. Now, we haven't seen this kind of number since last year May. So it's kind of sad, honestly speaking, but the last time it hit a low, it hit a new high for the year, which was around $16. But I don't know if I could expect the same thing, honestly, in the bear market. But because Blackberry was already so low near the bottom price range, I don't know if it should dip more, because I think it's still fairly valued. So I think it's undervalued, to be honest. But, you know, I don't know if I should expect it to go further down. If it does, I don't know if I should also buy more, because I'm trying to build my cash position to buy my first property in the next 1 or 2 years. So I should be focusing on kind of bringing in all the growth funds and the growth stocks, and you know, and putting them into more conservative investments or savings or whatnot. So I have a bit of thinking to do for Blackberry, but nothing much going on other than that. It's just the same old. No financial changes, no fundamental changes. It's just following the bear market, which is the general trend at the moment. So that's Blackberry. I've sold Virgin Galactic, so I think you guys realize that I don't have Virgin Galactic anymore. And Virgin Galactic did dip just a bit more to a $8 range or something like that. So I did sell that around $10 or $12, I don't know, something like that. But let's check actually. So yeah, so I sold Virgin Galactic for $12.38 USD per share, and Virgin Galactic is currently at $8.14. So, you know, good sell, I guess. I mean, I made enough kind of money off it. Remember, I sold twice at the tops here in the past year or so. So, you know, no regrets with this one. It was good. I let it go before it further crashed. So that's the US stocks. Nothing too much going on, but you know, going over to the New Zealand ones, Oceania, the ones you guys picked for me in the live stream last year. It's not doing so great because it's following the market as always. It dipped around 10% from when I bought it, because I bought it and it went up to like around 1%, 2%, and it dropped to negative 9.38% now. So a bit unfortunate, but it is what it is. Just the market trend, just not good. It's not that Oceania is doing bad, it's just following the market as always. Same with Rakon. I think I mentioned the higher the company went before the crash, the more it will crash. For example, if it was going up so high and it was in a like complete bull run, and then it suddenly had a market crash or market correction, it will be the most affected, because people would want to take profit out of the ones they made the most money in and keep the investments that they didn't make much money in. It's like my Blackberry, right? If I were already in the negative for Blackberry, and just because it dipped a bit more doesn't make me want to sell anything. Same with Plexure. But Rakon, I made like 120%, nearly 140% or something like that. and then it dipped to around 97%. So that's a big difference. So it hit a high of $2.22 on the 7th of January. Then we seen it go down to $1.62. That was a crash of around 27% or so. So, you know, it hit the bottom a bit and it kind of bounced up. But what you do need to, you know, think about is that this could be a dead cat bounce. A dead cat bounce is when we're going on a downtrend, and sometimes the market reacts a bit too much and it overreacts and it dips a lot, like 20% gone in like a day or two, or maybe in a week or so. You know, that's really fast drop. So sometimes they're like, oh wait, why is it dipping so much? And people just buy it up again and they're like, oh no, I don't want it to dip that much. So it bounces off a support line and it bounces up back to near where it was, sometimes maybe halfway through. So currently it pumped back up to $1.88, but you know, it might go back down again. So we just don't know what's going to happen, and for these reasons it's not easy to make good decisions in a time like now, because this is where most people will make mistakes, guaranteed. So this is why most people don't even care. They don't sell anything, they just keep it. And this is why most people should be investing for the long term, because if you're trying to time the short term, then it's not easy and you're gonna be stressed and you're not gonna make good, you know, decisions when your mental state is at the bottom. So, you know, it's all a downside roller coaster from there. So keep calm and have another think before you buy or sell anything in a time like now. Guaranteed, you will save yourself a few pennies. Nonetheless, Rakon, still a great company, still making good money. It's just following the trend as always. It's been going up so much in the past year. It took a bigger dip than most other companies, which is quite normal. So remember, the more the company goes up in the bull run, the more it can come down in the bear market. So that's just normal trends and normal fundamental basics. So just keep that in mind. Plexure, same old thing. It's dipped down to 41 cents. Not the greatest. It's kind of back to near the old bottom. So hopefully it's a double bottom here for Plexure. I'm hoping so. If it breaks this 39 cents, 40 cents kind of support level here, then I would be slightly worried and I would regret keeping Plexure. But you know, at this point it was dipping for the whole year. I can't do anything else. Like, yeah, it is what it is. So it's just hard times. That was already having a hard time and it has a bear market to handle as well. So a double negative for Plexure. Hopefully that makes a positive. Yeah, two wrongs make a right? Anyways, this is the portfolio update for today. Not the greatest news, not the happiest kind of returns. Actually quite depressing days for most people, but do remember it is for the long term. If you are in the stock market, just keep calm, just dollar cost average, or if you don't like this kind of risky movement, go to a fund, go to a low risk fund or something like that. It might fit you better. And yeah, just know what you are comfortable with, because the moment the stock market is overwhelming you and the moment the portfolio you have overwhelming you emotionally and mentally, you know there's something wrong. Like, for example, for me, this is nothing. Like, I've been through a couple of corrections, especially doing crypto for 4 years now, like 4.5 years, nearly 5 years. Seeing these kind of dips, like 10% dips, 20% dips over a night or over a week is so common that I don't care anymore. Like, volatility doesn't affect me much anymore. So that's why I can keep calm. But this is good experience for most people. So just endure it and learn a lot from it, and it will help you for the next cycle. Remember, these kind of cycles, we roughly expect them every 8 to 12 years, give and take. Doesn't always happen like that, but that's the general trend and that's the general market cycle. So just keep that in mind. Do some more research, learn about finance, learn about accounting, learn about economics as well, if you want to know why these kind of things happen in general. If you haven't studied economics, have a look at a video called The Economic Machine by Ray Dalio on YouTube. It's 30 minutes, but very nice to watch. It's animated, so it's really cool, straight to the point. It gives you like a economics 101 kind of overview, and if you can understand everything in that video, you're pretty much set for a general investor. Hope you guys all stay safe and red light. If you liked today's video, give it a thumbs up, put a comment down below what you thought and how your portfolio is doing as well. Subscribe to the channel if you're watching without that, because that's illegal. Bell notifications for the next updates and live streams, because I do a Q&A every fortnight or so, so keep tuned for that. It's normally on a Sunday, and I will catch you in the next live stream. Alright, cheerio.